Lisa, how much can we really glean about the maybe overall health of the American economy and the U.S. consumer?
America is in a credit card crisis and sinking further into debt, and it's coming at a bad time.
Lisa, how at risk are Visa and Mastercard to potential headlines as the year goes on?
Earlier this week, Goldman Sachs's credit metrics came in really weak, where we maybe are seeing a little bit of degradation in the middle income consumer, while the affluent consumer remains really healthy. Visa and Mastercard are much more global in nature. And so we are likely to see a little bit stronger volume growth there because internationally there's still a lot stronger growth coming out of the pandemic.
This all comes after a time during the pandemic when Americans were building their cash reserves or financial savings up during the pandemic. The sharp rise in credit card debt has been a long time coming, with Americans swiping plastic at record numbers faster than ever before. This reliance on plastic to purchase things is just the beginning. But why is there a sharp increase in swiping? There are many possible factors, such as high inflation or higher credit card interest rates due to rising interest rates. But with all this said, why are credit card service companies such as Mastercard and Visa making money hand over fist off of you?
In terms of the stocks, Visa and Mastercard have been sort of collateral damage of the big shift and migration into these AI stocks this year. And Visa and Mastercard have derated about 10% despite beating on revenue and EPS for 9 straight quarters. So even if we see a little bit of softness next week, we view this as a really, really attractive entry point, particularly into Visa, because their valuations, have really, for technical reasons, have derated a bit this year.
Keep watching, because in this video, we're going to get to the bottom of it all, including a way for you to profit from this all. Consumers racked up billions in debt over the years. According to many experts, America's credit card balance has passed $1 trillion, or it's about to, depending on whom you ask. The average interest rate on a new card is 24%. Credit card users added an all-time record of nearly $180 billion in new credit card debt to their debt during 2022, and that includes $85 billion in the fourth quarter alone. This is a disaster waiting to happen with a possible looming recession.
In my view, the least unlikely case is that we do find our way to better balance without a really severe downturn. I think there's a significant probability that there will be a downturn as well, though, but it's not to me the most likely case.
That's the hard landing scenario.
Or just this, I wasn't even thinking of hard landing. I was thinking of even a recession.
The average household credit card debt is nearly $10,000. I believe part of the issue is detachment from credit cards as money. The detachment makes people feel less pain or stress when they use credit. It doesn't feel like they're spending real money. It's similar to monopoly money. It's fake and definitely not real. Credit card interest rates are rising, causing Americans' outstanding debt to grow at a record pace. The average credit card interest rate rose to a record high of 20.4% this week, according to creditcards.com report. Two of the biggest beneficiaries of credit card debt are the middleman. And whom might that be? The world's largest credit card service companies, Mastercard and Visa.
Urethane economy because of how resilient it is, like one of those Tempur-Pedic mattresses, how resilient it is.
Credit card companies are incredibly good at marketing, and credit cards have become the way most of us pay for things, but who benefits the most from it? It's the credit card companies and the middleman. Credit card processing fees are the fees that a business must pay every time it accepts a credit card payment. For most merchants or small businesses, it's almost impossible to run a business without taking credit card transactions. The dilemma most merchants run into: the fees from these transactions eat into their profits, making it hard for some merchants to make profits. The average credit card processing fee ranges between 1.5% and 3.5%, and there are multiple fees associated with it depending on credit card type. Most U.S. credit cards are tied to the prime rate, and when the federal funds rate changes, the prime rate typically changes by the same amount. According to creditcards.com's latest weekly rate report, several lenders, including Bank of America, American Express, U.S. Bank, Barclaycard, and Wells Fargo, responded within days to the Federal Reserve's latest quarter-point rate hike by introducing equivalent rate increases to online offers. So this has turned out to be a bigger issue than originally they anticipated. So be careful if you are in a position with credit card companies looking to profit off your misfortunes, and consider investing in Mastercard along with Visa when there is opportunity to do so.
The way I would think about it is that they make, on average, about 30 cents on every $100 transaction that's processed with one of their cards.